Stocks trade soft after the RBI policy raised inflation expectations, even as Q1 earnings present a mixed bag. Metals and FMCG are the big drags, while industrials and realty manage some green on the screen.
HCL Technologies clinches a $2 billion 6-year contract from global communications major Verizon, which can add over 1% to its revenues for the year. The big win lifts the stock.
Bharat Forge chairman Baba Kalyani tells CNBC-TV18 that orders worth 3,000 to 5,000 crore rupees for guns are in the pipeline, and the aim is to become a global house of artillery. He also sees the industrial business scaling up in 3 to 4 years.
And MSCI rejigs India's indices with the prominent global standard index for India, seeing several stock inclusions implying a net inflow of foreign money. Stocks of surprise entrants Supreme Industries and REC perk up.
Hello and welcome. I'm Nisha Poddar and you've tuned into Business Lunch, and I'm joined by my co-anchor Pavitra Parekh. Pavitra, good afternoon. The RBI impact still weighs on the market, and of course it's the inflation concern which will linger on till we know the future trajectory from the RBI. So take a look at the markets at the current juncture and the low point of the trading session. When we talk about Nifty 50, about 0.5% down in trade and given up the 19,500 levels as well, getting comfortable today because of the nervousness around inflation estimates that RBI had given. And also remember that RBI has stated that there'll be temporary measures to suck out liquidity to tackle inflation. All that and more is really impacting the market. Bank Nifty is also taking a bigger drudging, 0.55% down in trade and dragging the overall market. Mid caps are slightly outperforming the key indices as well as the banking pack, but in the with a negative bias. Advanced decline ratio remains in favor of the declines because of the weakish sentiment that we are seeing. But some of the counters on my screen which are really taking a contra call to the overall market with their momentum, HCL Tech, Titan, Power Grid, LTI, Mindtree are some of the gainers on Nifty 50, Pavitra.
Oh, absolutely. But there's just a handful, right? Just around 10 stocks which are managing to see gains, and maybe only 2 or 3 of them which are really worth talking about. Today you're seeing cuts across the board with the pharma index leading the fall today. And this is, of course, after several days of a gain. But today, the pharma results have also been very disappointing. So names like Biocon, Alkem, seeing big cuts come through. The defense names which, the market loves, the likes of Mascondoc, MTAR Tech, all of these seeing some cuts as well. But I am going to look for one spot of green in the market, which is some of these banking names, the smaller PSU banks, seeing a big move higher today. So names like IOB, Central Bank, J&K Bank, all of these seeing quite, significant moves come through, even as the rest of the larger banks, the large private sector banks, are all in the red. So I just wanted to point that out. But let's kickstart the show by talking about some of these individual stocks which are really moving around in trade. Like Nisha was pointing out, HCL Tech is the top gainer on the Nifty. This after it has secured a $2.1 billion deal with Verizon. So Rima is here to take us through all of the details on this one and also what brokerages have to say about this deal. Rima.
Thanks so much for that. So HCL Tech has won a mega deal. It's a $2.1 billion deal from Verizon. It's a net new deal, and it will be spread over 6 years, starting from November of 2023. If you do a simplistic calculation, that's $2.1 billion divided by 6 years, then you come to an annual revenue figure of about $350 million, assuming a linear, execution. Though the ramp-up schedules do differ, but on an average, it can, on an annual basis, add about 1.3% to the FY24, FY25 revenues. This provides the street a lot of comfort in the company inching closer to achieving its full-year guidance of 6 to 8%. Morgan Stanley's overweight on HCL Tech, they say such deals should lower the perceived risk of a potential revenue guidance cut at the lower end. With this announcement, they expect some of the underperformance to reverse. So after, in HCL Tech's case, the Q1 numbers were very weak. So the street was fearing that the company will lower the full year guidance because after such a weak start to the year, they thought it's not even possible for the company to achieve 6%. That's the lower end of the guidance. With this deal, there is some comfort in the company achieving that. JP Morgan, though, believes that this deal could be margin dilutive. Back to you.
All right, Reema, thanks a lot for bringing us all of those details. In fact, we also did speak with the HCL Tech management this morning to understand the contours of the deal and also how soon it could really start contributing to the top line. So listen into that as well.
Absolutely. Delighted to share that, yes, it is HCL Tech's largest services deal and thereby a significant milestone in our services journey. When does it start? It starts from November of 2023. And then, yes, it goes on from there 6+ years. And specifically in terms of revenues, every year, of course, is a little varying. But at the same time, we specifically, the revenue for this financial year is something, it'll be aligned to the market guidance that we have already provided most recently. As you remember, we did mention once again in our earnings call that the pipeline and the funnel is at its all-time high. And we talked about the whole process of now converting that into wins. And here is one of our most significant ones that we have announced. It continues to still stay very robust, very strong, and we are actually working on significant other similar transactions that we are working, and as customers will start finalizing their decisions, it will start getting converted to decisions and announcements. So it is looking very healthy.
All right, HCL Tech there with the big deal win and also the top Nifty gainer. Bharat Forge too is not doing bad. In fact, close to the 52-week high levels, close to the high point of the trading session as well, and it reported a solid set of first quarter earnings. In fact, the company witnessed strong growth in the defense and aerospace segments of the business. And earlier today, we spoke to Baba Kalyani, who's, remember, the CMD of the company, on the order pipeline for the company going forward, outlook for the defense business, and also more on the performance trajectory. Take a look.
On the domestic side, there is a huge pipeline of orders which are under, let's say, the whole process. The process is quite complex. If you look at artillery guns, there is already a discussion going on for 307 guns of ATACs. There is another RFP for mounted guns, which is also of similar number. So we are looking at least in these two areas, the opportunity in the next, let's say, 1 year of getting orders is anywhere between 3,000 to 5,000 crores. I've always maintained many years ago that Bharat Forge will strive to become a artillery house on a global basis. We are targeting this year, our financial year, to get to somewhere around 1,200 crores. But that will be, say, almost like 800-900 crores of exports, and then the remaining domestic. And I think next year we would like to double this number.
Right, that is a very, very optimistic Baba Kalyani from Bharat Forge talking to us about the kind of opportunities that they see in defense and think that they're going to become a global artillery house. But with that, let's also move on and talk about the important MSCI decisions that have come through. And they've announced the Global Standard Index review. This is for August. Vivek is here with all of the details and the big stock moves as well. Vivek.
Well, that's right. So, today early morning, MSCI released the Global Standard Index review for the month of August. Important to track given the fact that some of the stocks are impacted quite significantly. Also important to note that a lot of quant analysts had actually penciled in quite a few inclusion as well as exclusion candidates, and a couple of surprises too have emerged there which have seen significant movement as far as today's trading session are concerned. A look at the list of inflows or which are the list of stocks that have made their inclusion into the index. First on our list, Cummins as well as Ashok Leyland, both of these stocks, getting flows well in excess of $170 million. The other stocks that have made their entry are IDFC First Bank, HDFC AMC, as well as PFC. All of the names above mentioned, largely along anticipated lines. However, two stocks that are on our radar, REC as well as Supreme Industries. They have made a surprise inclusion as far as what quant analyst expectations were concerned, and both of these stocks are going to get inflows over $170 million as per IIFL and expectations. On the back of that, both of these stocks are significant movers in today's trading session. On the other hand, ACC is the stock that has been excluded from the global standard index. Another important thing to note is that they've also gone ahead and updated as far as the MSCI treatment on Adani Group stocks are concerned. At this point of time, they've deferred any weight changes in Adani Group stocks. They're still awaiting for further clarity. All of these changes mentioned above will be effective from September 1st of 2023.
All right, Vivek, thanks so much for all those important details, and each one of those developments at MSCI has a stock impact as well. With that, we'll slip into a short breather on Business Lunch. When we return, we will get you the latest on government's EV adoption push and what lies ahead. Stay tuned for that.
The continued
Welcome back. You're still tuned into Business Lunch, and let's now get you a very interesting word from ITC's Chairman and Managing Director Sanjeev Puri. He was addressing the shareholders at the company's 112th AGM earlier today. So listen into what he had to say on the company's decision to demerge the hotels business and how it is really likely to benefit the company from here on. Listen in.
The continued interest of ITC in the new entity will provide long-term stability and instill a sense of assurance amongst partners, investors, and employees, while enabling the new entity to leverage ITC's institutional strengths, including the timeless goodwill, world-class brands, and governance processes. For ITC, the reorganization will sharpen capital allocation, improve asset efficiency ratios, and unlock value for its shareholders, as well as enable leveraging of institutional synergies.
All right, moving on from ITC, well, the FAME2 scheme to support electric vehicles with an outlay of 10,000 crore rupees draws to a close in March 2024. Now, over 8.72 lakh electric vehicles have been incentivized by the central government under the FAME scheme. CNBC-TV18 has learned that the government has decided that support for electric vehicles must really continue. Going by the initial proposals by the government, well prepared by them, the scale of the FAME3 scheme could be bigger than FAME2. That's going to be a big one. Parikshit Luthra gets us all the exclusive details. Parikshit.
Well, the preparations for FAME3 have been going on quite earnestly and quite speedily in the Ministry of Heavy Industries and other ministries in the government, and we believe the first draft is now ready. It will be proposed to the Finance Ministry, the Prime Minister's office, and once approved, it will go for cabinet approval. But the government is very keen on supporting the industry with a 40,000 to 50,000 crore outlay, and there is a belief that this kind of a support would be needed over a 5 to 10 year period. Now, FAME3 scheme could go beyond electric cars, electric two-wheelers, electric three-wheelers and buses to support electric trucks, small electric trucks, electric bicycles and quadricycles as well. There would be a substantial allocation for electric buses in the public transport segment and also electric charging infrastructure across the country. Now, there are 2 or 3 different models that the government is contemplating. So both demand and supply side incentives. On the supply side, we believe that the government is also working on a PLI scheme for components of electric vehicle batteries. So this could be the ACC component PLI scheme after the ACC PLI scheme. And this could be for incentivizing the manufacturing of cathodes, anodes, electrolyzers and separators which go into an electric vehicle battery. There is also work going on a PLI scheme, a separate PLI scheme for niche battery technologies. So this could be important for industry and future battery technologies as well. Prioritizing reuse and recycling of electric vehicle batteries is also being contemplated, and these draft proposals are being examined right now, and we believe that within the next few weeks, the government could either announce a roadmap or its intention to support the industry with a FAME scheme for the next 5 years till at least 2030.
All right, Parikshit, thanks so much for all those important details on this big push by the government. Let's slip into a big breather on Business Lunch. But coming up next are the excerpts from the newly rebranded X-Corp CEO. Stay tuned for that exclusive conversation with CNBC. Welcome back. You're watching Business Lunch. A quick look at the market, and Nifty is trying to recover a slight bit from the low point of the session, 0.3% up, down in trade and losing about 60 points. So a fair bit of recovery. A large part of it coming is from Reliance Industries, which has recovered, and also from Bank Nifty, which is now down about 0.35%. So keep an eye out on the market. There is a slight bit of let up seen at lunch hour. Now getting you some cues from Wall Street and important global macroeconomic factors. Well, the CPI inflation in the United States for the month of July rose 3.2% from a year ago period, below the expectations of a 3.3% rise that was really factored in. Now, the core CPI increased 0.2% for the month, coming below the estimates at 4.7%. And this is the lowest it's been since October 2021. Now, meanwhile, real wages also increased 0.3% on the month and were up 1.1% on a year-on-year basis. So important global cues that the market is keeping a watch on.
Oh, absolutely. This is the key global cue that, we were all waiting for and came through yesterday. But with that, let's also bring you a very important word. Remember, Twitter was rebranded as X-Corp just a fortnight ago. But why was it done, and what was the real reason to get rid of the old branding? See, the CEO who started the job just in June says that Elon Musk has been working after this rebranding ever since buying Twitter late last year. And she also talks about the feedback received from the user community, as well as her experience really working with Elon Musk. Listen in.
There's been a lot.
Right. That's quite an interesting conversation there, but completely out of time on this edition of Business Lunch. Don't go anywhere. Mid-Cap Radar comes up right next. Thanks so much.